And now, unbiased and independent, here is your Manhattan Weekly Market Report with Noah and John from UrbanDigs. Hello, everybody. This is Noah and John, and we are from UrbanDigs, and it is Friday, so you're going to get your weekly Manhattan market update. John, let's get right to it. Let's see what's going on. Let's see if last week's momentum can continue until this week, Johnny. I'm looking at supply, 7,665 things trying to sell. Show me that chart.
Well, the momentum is not on supply side. Supply took a down dip, down 1% on the week. And this is kind of exactly what we've been expecting for supply. It kind of rises up, and then right around this time, it starts falling off. So we're down 1% on the week. And, looking into really through January, even February, we're going to expect that number to kind of slightly drop every week.
Well, Johnny, you made a call last week. I believe that supply is showing the beginnings of a topping formation. And I thought that was a very astute call, if I said that word correctly. And that trend is now starting to roll over. It's not what you would see in a market where sellers are panicking, John, is it? With supply starting to roll over. It's kind of a seasonal thing, and it's what we're supposed to see every single time this time of year. So let's move on. Let's look at demand pending sales, 2,678. Show me that chart.
Yeah, and this is sort of counter seasonal. So this is one of the things you would expect to be rising here in the busy season, and it's actually fallen. It's still in that reset mode, down another 1.5% or so this week. We're approaching, though, the lines for 2020, 2019, and we're kind of expecting maybe there may be some support there with contract volume ticking up, but it's a big if. I mean, really what we've seen, and you mentioned it earlier. I mean, yes, supply is topping out. We're not seeing the panic on the sell side right now, but it's shaping up to be a very weak season.
Yeah, and let's just point out the very important thing of what you said. Pending sales is showing some macro declines, right? We're not supposed to be doing it this time of year. It's supposed to be significantly higher. There's supposed to be higher deal volume. That is 100% true. That is a macro situation on the demand side. On the listing side, on the supply side, it's a seasonal situation. So you got a seasonal element on supply, you got a macro element on pending sales. That is showing the market pulse. It's pushing the market pulse lower, and we are in buy side territory. We are in buyer's market, and this is just hovering. This is just hovering right around this level, 35, 36. So it's kind of showing a bottom formation on the market pulse, Johnny. Let's go to the weeklies and see if there's any information there that would maybe tell us which way that pulse might go. I'm looking at supply, 1 week, 330. That's down about 16%. Show me that chart.
I mean, you've said all I need to say. I mean, that's exactly what's happening on the weekly supply here. And it's basically, you look at this chart, I mean, and these bars that are showing for 2022 are basically matching pretty much every line from 2020, 2019, 2021. They're all right in the same. And really the point of this is to say that the story is not the supply side. The story, Noah, is the demand side. And just as much as prices are driven by buyers, this market is driven by that demand side. I'm going to get to that in a second.
Yeah, let's move right to that demand. And last week we had a nice bump up in demand. It was right after that Mara comment. I loved it. It gave me that feeling of goodness that we can come back. This is not a good follow-through week. I see contract signs at 167. That is down 22% from last week. Johnny, show me that chart.
Yeah, and you hate to see that down 22 because it was such a nice week last week. And you look at some of those lines, right? And the whole idea is that we can't really compare ourselves to 2021, right? That was such a monster year. Let's look more at 2020, even 2019, to kind of get a sense of how are we, compared to sort of, previous trends. And we're down. And so you've seen some of that tick down around this time, 2019, 2020, but we're just still below it. So even though it's kind of expected to maybe tick down, that step down is 20% is really not what you would have wanted to see at this point.
Yeah, no. You want to see that later on. You want to see that later on, not so soon. And if I switch to the monthlies just to get a bigger picture right here, again, that this week's data is not going to help that number of 738 get to where it needs to be, which is the high 800s. This needs to get to about 890 to hit the seasonal level. That's just where we're supposed to be. That's our benchmark of where we're supposed to be. And it looks like we're running out of time here, Johnny. We're running out of time. And if we come in below, then we're below historical trend. And let's just take a look at this chart that you generated. I love this chart, Johnny. And if you take this number right here, 738, it's basically that red line. All right down here. That is your 30-day contract sign pace. So now you can see what that number has done over time. And the pulse, the market pulse, the UrbanDigs market pulse, that is in blue. So we're looking at the correlation between the 30-day moving window of contract signs, deal volume, right? Every day that moves. When that starts to turn around and how that moves, and its effect on the market pulse. And the one thing that I see here, right, Johnny, is every single time that the market pulse is starting to show a turnaround and recovery, right? You got it right here, you got one right here, you got one over here. It always portends the market pulse turning around and showing a rebound. That's one thing I see. I'll let you talk and then I'll go into what else I see here, Johnny.
No, I totally agree. So, the idea is that, that sentiment is going to be declining even as the market has sort of found a little bit of a bid. And we've seen a little bit of a bid here, right? We can see that contract sign line kind of come down, start being a little bumpy on the bottom here.
Yes.
But honestly, no, when I look at this chart, this is not a good news chart. There's no real good news for sellers because we're at a new lower level. And there's really not a lot of good news for buyers here because there's none of that panic that you would really expect to swoop in and grab a great deal here. So what this chart is essentially telling me is that we've really moved down to a new, as I said earlier, a new lower level, and we're just going to be hanging out for a while because there's no seasonal reflection that we're going to have. We're not jumping into the spring season for several months. So we're just going to be in a bit of a quagmire for a little while here.
Yeah, and I drew a couple support lines over here, guys. This is what we call like a left translated cycle trend, which is a lower highs, lower lows, versus an uptrend. That's a downward kind of a trend in terms of liquidity, where you expect this line to kind of hit support and kind of go to lower and down like that kind of a thing until it breaks. And what I see here, and what my concern is that every time we see this turnaround in contract activity, we've really been conditioned to see a pretty substantial or at least a seasonal rebound. Okay.
Right.
I am questioning where this is going to go. I am questioning, again, just to go here, where this 738 is going to go. And if we're going to reach 1,000 the rest of this season, or if we have to wait until March or April, the next contract activity wave to hit, which is March, April, May, to get this number back up to 1,000. So we might be in a zone. Okay. We're not in the COVID zone. Like, look at COVID, but we might be in this zone that's below trend versus, say, the zones that are well above trend that we were in for the last 19 months. I think we're going to be in this below trend zone, and it's something that sellers need to take very seriously. You cannot be aspirational, and if you want to test the market and test high, fine, but know that you're going to be sacrificing that first 3-4 weeks of critical discovery for the open market, and that's when you really need to get that deal done. So you need to price right off the bat, or at least if you don't and you test, take lower bids seriously. If you're going to test up 5%, don't be surprised if you get a bid down 10%. Because that might be closer to where the market is today, Johnny.
Right. And I would just follow on to that point to talk about what to expect on the buy side. So if you're a buyer, what does this chart tell you? I mean, it basically tells you that you can probably get a discount, maybe in the 5% or so range, but don't expect, with that contract sign volume sort of bumping along the bottom, don't expect a 15 to 20% discount. It's just not going to happen. It's not that kind of market. So, like I said, you're absolutely right. Sellers are going to see rising discounts, longer days on markets, and buyers are going to maybe see a little bit of a window where they're going to get some discounts, but really, this is a normally functioning market. It's just slower than normal.
Yeah. And my thoughts on buy side, if you want some advice for buyers, is you no longer have that fierce slope of active decline that was dictated by this decline of the red line here. The red line is coming back. So that's going to make this curve go a little bit more like this. I could see it right here coming back. So from a buyer's perspective, the market's kind of in a little bit of a bid mode after getting hit. So you're not going to have that fear that may have been there in July and August kind of a thing, or maybe up here closer. You're not going to have that fear. The market did shift. A lot of sellers are in denial. A lot of sellers are anchored to record prices that were only 7-8 months ago, right? And buyers need to understand this is not a mass panic sell-off market, Johnny, just like you mentioned before. And a lot of sellers are just not interested in selling down 10%. If the market could be down 6 to 10% right now, and the buyers be like, hey, I'm bidding where the market is, the sellers have the right to choose if they want to hit that bid. And some sellers are choosing to rent, and some sellers choose to go off market. And that's why supply is not going up. Yep. And that's what adds to the mystery of this entire market, Johnny. Okay, Johnny, we're going to stop it right there. We've been talking a lot about this chart, but I love it. John Walkup, thank you so much for pulling that up. I am Noah Rosenblatt. We are both from UrbanDigs. Don't forget, you got questions, we got answers. Please visit our forum right down here. If you want any of the reports that John whipped up, please go right over here. And if you guys need help closing a deal, we just launched an advisory service. You contact support@urbandigs.com and we can help a custom report to help you close a deal on the buy side or the sell side or any kind of developer or investor side. Other than that, this has been your Manhattan Weekly Market Update, and we'll catch you next time.